Imagine this, a company so influential in the world of artificial intelligence that its movements rival those of the Federal Reserve. Sounds dramatic? Well, it's not far from reality. Nvidia, a well-known name in the tech industry, has seen its shares skyrocketing by a stunning 145% over the past year. The reasons for this surge are as fascinating as they are powerful, centering on Nvidia's crucial role in the AI ecosystem. But wait, there's a twist. Amazon recently made waves by issuing a cautionary note to Nvidia's shareholders, raising eyebrows and sparking debates among investors and industry professionals alike. Stay with us as we dive into this thrilling topic, exploring Nvidia's dominance and Amazon's intriguing warnings. Hello everyone and welcome back to Investocracy.
Let's get some insights, the news, shaping the markets. For that, we welcome in Peter Tuchman's with us, Senior Equity Floor Broker at TradeMoss. Glad you are here.
Always a pleasure.
Nvidia. I mean, it was a big deal. Everybody was really waiting for it, right? I mean, set it up for us, and how did you think Nvidia did? What does it tell us?
You know what, look, I think maybe one of the contributing factors to the little bit of weakness is that everybody was looking at it. Everyone was involved, whether they're in an option play or however they were going to play it. It was almost overplayed, right? But think about it. I was just reading that for the first time in 3 quarters, they came in below a 200% increase. Like, that's a very high bar to set, that you're calling that a slight disappointment. I think that's insanity. So I rather look at just how they beat on everything. Guidance was better, the stock is still the flavor of the moment, and it is the as you said, the lovely of the stock exchange. So I'm not going to overanalyze it in that way.
Right.
I think you're going to get a little bit of a shakeout here, and then the stock's going to forge higher. It has to. It's
going
just
to
what it
forge
is.
higher.
Yeah.
So you think you break out to new highs? I remember that high was
I really,
maybe 140 was the high. I think. Right. Where do you think
140
this
was
could
the
head?
post-split high.
Yeah.
Yeah. I mean, look, I'm not here to predict where the stock is going to go.
But you think it can make new highs?
Why wouldn't it? The information that we got yesterday was spectacular, right? And if somebody look, when you have somebody come in and they go, you know, everything was spectacular, they hit on every piston, except that growth was a little lower, then, you know, you've got great growth. If it's the first quarter and 3 where their growth is a little under 200%, I think we're nitpicking.
Right.
So I think you're just going to let it shake out what all the players are doing right now. I think it's really important. We saw Salesforce, a number of other companies beat yesterday, and we just saw them across the board up $6, $7, $8. So that's good.
It's amazing the price target range. For example, D.A. Davidson, $90 neutral on Nvidia. 90. Benchmark reiterates a buy with a 170 target. Right. And the Citi saying move over Nvidia. Apple is Citi's top AI stock pick. It's interesting how we see, I guess, a variety. Apple also upping the orders for the iPhones.
Right.
They announced that today. But the whole group, tech overall, still hot. The AI revolution is full on.
It's a revolution. I talk to Dan Ives every week.
He's our friend and he's your friend. So
and he's my friend, and he says we're in the second inning of the game.
He loves it, right?
It's a revolution. We're in the second inning of a really long, great game, and that we just should sit back and enjoy the show. Get your popcorn ready, buy a nice, a seltzer, and sit back and enjoy the party.
In the fast-paced realm of the stock market, there's nothing quite like a juicy piece of news to get investors buzzing. When Nvidia's name comes up, it's usually synonymous with breakthrough technologies and impressive gains. But Amazon's recent pronouncement adds a layer of complexity, suggesting that Nvidia's reign might face some significant challenges in the near future. Here's where the story gets particularly interesting. Nvidia's graphics processing units are the gold standard for accelerating complicated data center tasks such as training machine learning models and executing AI applications. According to the Wall Street Journal, Nvidia's chips form the backbone of all the most advanced AI systems, boasting a market share estimated at over 80%. Some analysts even peg this dominance closer to 95%. That's a monopoly by any measure, and one that has not gone unnoticed. But the plot thickens with a statement from Amazon's CEO Andy Jassy, who recently commented that no single AI chip could meet all possible use cases. Reminiscent of the battle between TensorFlow and PyTorch in machine learning frameworks, Jassy underscored the fact that different users need different options. To meet this demand, Amazon is investing in custom AI silicon, products designed to offer compelling price performance. They call these chips Trainium and Inferentia, and they aren't crafted to dethrone Nvidia on performance alone, but to serve as cost-efficient alternatives. Essentially, while some customers are willing to pay a premium for the fastest chips, Others might prefer slower, more affordable options. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
Let's get the bigger picture. Jeffrey Small is with us, President, Arbor Financial. Let's talk about what's going on in your mind. I mean, we just had NVIDIA. I think that was an important one. What say you?
Oh, there was no doubt the market's hopes going forward, the secular AI boom and the secular growers of the big mega cap, big tech stocks were severely dependent on the numbers that NVIDIA produced yesterday. And they did produce great numbers. They were actually stellar, up 122% in top line number, 170% in profit was up, 75% margins. And so for every $100 NVIDIA makes, they make $56 and they get to keep that as profit. That's a ridiculous number compared to the mega cap, big tech stocks. But NVIDIA's numbers are slowing down. And so quarter over quarter, it only went up 15% on the top and bottom line numbers. And if it did maintain that 15% growth for the next 12 months, we would see the stock rise approximately $82 from where it is today to around $202. And so I say NVIDIA is a buy. These dips right now are a bargain for one of the greatest growth plays in history, Nicole.
Yeah, and look, you're talking about NVIDIA. You also think Meta's right up there, too. This is your 1-2 punch.
It really is, if you want to use this boxing metaphor here. Meta and NVIDIA have been the two best stocks here the last 30 months in the market to own. And it's kind of ironic. What do they have in common? They've got incredible fundamentals. Meta just outperformed dramatically. Their quarterly earnings were up 73% year over year. That's a phenomenal number. Their user base expanded another 7% to 3.3 billion. They control 75% of the internet. They're the most of advertising, that is, of internet advertising. They are the most undervalued Mag 7 stock in the market today at 26 times earnings. And, as long as their earnings keep growing, this stock's going to grow. My 12-month price target is $600 in 12 months from here. I think that's very easy for them to accomplish at this stage.
All right. So what's the final here when you think about some of the other names in the Mag 7? I mean, let's keep on this for a moment before we get to some of the other topics. But, I think about the Magnificent Seven, the whole group. Is the whole group pretty interesting to you or not necessarily?
Well, I do love the whole group, Nicole, but I didn't realize we'd be talking about the other four today, but that's okay. I think Microsoft is a phenomenal buy at this price right now. They've got great upside. Of course, they're in the middle of the AI boom, as well as Apple. Apple is really, starting to gain traction. They've got their big announcement coming out on what's going to happen with their phones. We're expecting a super cycle here sometime midpoint next year to occur as AI is integrated into their cell phones. And so I think those are also great plays to have. Tesla has lots of promise. If they can master their autonomous driving here in November, we'll see where they are, what the stage of that is. And so, Netflix is doing incredibly well, too. So all of these companies are secular growers for the long term. And even though we have some rotational leadership changes in the market today, due to the decline in rates, these Mag 7 stocks will not be affected to the upside by rates falling by Federal Reserve action when the Fed lowers rates. The broader market will, especially in the small cap arena. And so those companies have more of an upside effect when rates are adjusted to the downside. And so in the meantime, though, I'm a firm believer you've got to have these secular growers in your portfolio for the long term, Nicole.
Now let's sprinkle in a bit of humor. Investing in the stock market without Nvidia might be like attending a comedy show with a straight face. Possible, but not nearly as fun. Amazon's experience is worth noting here. The company has a history of developing custom chips, such as its Graviton processors based on ARM architecture, which boasts 30% to 40% better price performance against top x86 processors from giants like AMD and Intel. Amazon aims to replicate this success with its new AI chips. And it's not doing it alone. Other powerhouses like Broadcom are also making strides in this space. Broadcom develops custom AI chips for companies like Google and Meta, and recently landed a fourth major client, speculated by Reuters to be ByteDance. Joseph Moore of Morgan Stanley adds another dimension to this narrative. He notes that hyperscalers, industry behemoths including Amazon, Google, and Meta, are increasingly turning to custom silicon to manage cost and energy consumption in AI computing. This growing demand for custom silicon indicates a shift that may gradually erode NVIDIA's market share, though it is unlikely to completely topple its leadership.
The market seemingly thinking it's a disappointment. Did you think it was a disappointment?
Hi, Caroline. I was not disappointed with the actual numbers here. I think, expectations were very high going into this particular print. And, especially when you hear of things like events in New York in which, bars were being rented out to see what the earnings report was going to be, it gets to a different level. I was not in one. I was at my desk looking at the numbers.
Joe Weisenthal, I saw, our Bloomberg reporter, was indeed out there in the bars. But I'm interested, Aiko, in, even though you did see this overall disappointment and very high expectations, was there any cause for concern? Do you still think, as Ed put to our previous guest, Anthony, that the AI trade is intact?
The AI trade is intact. I think we have to put this in the longer term context. Nvidia was generating revenues of about 27 billion about 2 years ago. They're on pace to generate revenues of over 125 billion this year. That's just enormous. Is that growth rate sustainable? It clearly is not. But they're continuing to grow, and the expectations are for growth of over 40% in revenues for next year. And Blackwell is just going to be another step up in allowing that to happen.
Ayoko, Wealth Enhancement Group has 7.8 million Nvidia shares, like $1 billion worth of stock. I know that you were part of our kind of watch party last night, watching the interview. You lead research, right? You use your expertise to try and work out what's going on. What did you work out during the course of that conversation?
I think this is a long game. I think we're still in the early innings of AI deployment. The hyperscalers, Meta, there's so much use from all of these. It is table stakes for these large cloud providers. And they're seeing productivity gains from the use of AI. So I think that's going to continue. It's going to proliferate. It is going to take time, but the internet took time as well. And 20 years later, it's still evolving.
Interestingly, even though Nvidia's gross margin dipped by 330 basis points sequentially in the latest quarter, this didn't stop the company from recording a 122% increase in revenue driven by AI chip demands. Analysts like Jim Kelleher from Argus are bullish, suggesting that technology investors should hold Nvidia stocks while navigating the new AI-driven tech landscape. Adding more credence to Nvidia's pivotal market role, Mohamed El-Arian, chief economic advisor at Allianz, made waves with comments about Nvidia's immense market influence. He hinted that the time-honored phrase, "don't fight the Fed," should now be expanded to, "don't fight the Fed, and at least for now, don't fight Nvidia." A testament, indeed, to Nvidia's power in shaping market dynamics. El-Arian's comments are timely, especially with the recent resilience shown by the Nasdaq and S&P 500 futures, despite Nvidia's slight stock dip following its second quarter earnings report, a report that managed to beat expectations but raised concerns about sustaining the AI rally. Meanwhile, economic indicators like a 3% annualized growth rate for the U.S. economy in the second quarter underscore a robust economic backdrop, even as traders adjust their forecasts for the Federal Reserve's next steps. So what does all of this mean for Nvidia stock investors? The answer is easy, but before going through it, if you made it this far into the video, thank you. These videos take a lot of effort and time to make. So if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Well, interesting 15 minutes there. Nvidia faded back down below 120. But the Nasdaq strength just kind of shifted into the Russell. So now the small caps are the highest on the day. All right, we're still up, but Nvidia's still down. Dave Altavilla joins us, principal analyst at Hot Tech Vision and Analysis. Dave, welcome back to the show. Good morning.
Good morning, Oliver. Good to see you again.
Great. So tell me firstly about Nvidia here. We're still kind of within recent ranges, a little calmer move than many investors expected, but still down. So is that going to be an issue?
I don't understand the downtrend at all on the stock price. I'm a technology analyst, and from what I'm seeing, the leading indicators for Nvidia are very strong. They had a big beat, obviously another blowout quarter. On the call last night, Nvidia CEO Jensen Huang noted that the Blackwell delay, their next generation GPU that was being rumored about, was basically a speed bump. It's a spin to one of their mask sets to improve yield. It wasn't a functional spin, so the product is working fine. They're just trying to get better yield out of it. And they expect to ship several $billion of Blackwell systems in Q4. So that's going to be incremental to the H100, H200 GPU business they're already enjoying in full production. So I don't see this train slowing down anytime soon. And the data center AI build out is strong with all the major hyperscalers, whether you look at Microsoft, Azure, AWS, Oracle Cloud, you name it, Google Cloud. Everybody's building out and investing CapEx in the build out, and I think that trend is going to continue. The other thing to remember quickly here is that Blackwell, their next generation GPU, is not just a GPU. It's an entire rack scale solution, including some very high speed proprietary interconnect called NVLink. And so NVIDIA with its OEM partners are delivering full platform solutions to market with Blackwell. They're not just selling chips. And I think that's what you need to compete in this very aggressive data center AI market.
Okay. Like the point about how much comes with this product and really the varied kind of uses and applications. I want to come back quickly to the Blackwell thing because the detail is important as they talk about having to fix that mask. I mean, that's pretty much like the template that you're using to make the chip. And they're basically trying to get higher yield. They want better, I guess, deposition or whatever part of the process it is. But that's something that is like they're trying to increase basically the margin on it, right? So it's not like it doesn't work. It's not like it's faulty. It's not like anything didn't work out as planned. They're just trying to say we want to make it even better.
Yeah, basically, it's how many of these chips you get out of a wafer. They're trying to improve yield with this mask change. Functionally, there isn't an errata in the chip that they had to spin because it's not working. And so this, again, in talking to some of their OEM partners, whether it's the Supermicros or the Dells of the world, this is just a few weeks speed bump. This product will be shipping. It's already in customer data centers in bring up and running, but it will be shipping in Q4 to the tune of several $billion, quote unquote, based on their earnings call information yesterday. So I do not see an issue with that at all, really.
In conclusion, while Nvidia may face some headwinds as competitors like Amazon and Broadcom develop cost-efficient alternatives, its position as a market leader in AI infrastructure seems secure for now. Wall Street's forecast for Nvidia, anticipating a robust 37% annual earnings growth over the next 3 years, makes it an attractive investment. Should you consider adding Nvidia to your portfolio? With its substantial influence and market-leading technologies, the consensus leans toward a resounding yes. Currently hovering at a multiple of 56 times earnings, some may view Nvidia's valuation as steep. However, when juxtaposed against its potential for growth and market influence, the picture becomes much more enticing. As investors, it's essential to weigh these factors and decide whether Nvidia's innovative edge aligns with one's investment strategies. So, what are your thoughts? Given Nvidia's current standing and future prospects in the world of AI and semiconductors, do you agree with the sentiment, "Don't fight the Fed and don't fight Nvidia"? Share your opinions and let's continue this captivating discussion. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.